Okay, welcome traders to the trade setups to focus on sort of presentation now with the new sort of strategy fit matrix that I have sort of come up with. The This is really focusing on stable and compliant traders, right? A little bit more focused, a little bit more relaxed, analytical, looking for precise trade setups and these things. Which you know what, if you're a dominant trader or an influential trader, you're probably looking for these anyway, right? Those more dominant strategies that come with higher risk, right? And so that's what you sort of need to understand is, let me just sort of bring that across because what we're looking for or what we're looking at, and why won't that move over, is trying to work out the best setup for us, right? For some reason I can't goddamn move that over. Okay. No. Right, I'll come back to that. So, okay, now let's just get into this, right? So now I've actually also sort of just updated the site to sort of reflect, you know, this is really probably the starting point for every trader, right? Looking at what is your personality profile and the alignment that you need for your strategy path, right? Which is your strategy style, the way you execute. We can optimize this to get a better outcome from each trader, right? And I was saying this before to a group of guys or in one of the presentations. I looked at this in really deep detail in 2016, 2017, and came up with the sort of profiles and then the structure of those profiles. What they all came back to be was all high risk because, the one intrinsic component was, trading the markets, which comes with high risk. You've got to have that personality profile. So it didn't work, right? And after coming back to this, we've got an absolutely epically massive, I should say, program, right? Which is, great because it's like walking into a library of trading resources. Now, instead of sort of giving you all the library and trying to work it out yourself, you do your personality trader profile assessment, and then we can actually really align what you should be looking at, how you should be executing, and all the other various components, right? And I can tell you what, for me, as the sort of developer of this whole system and the education and the whole pathway, it's massively refreshing because now I can look at each individual trader and go, hey, listen, before we actually start the discussion, what's your personality profile here? Okay, because this is really important to working out who you are and how we can get the best out of you. And the traders that have been in the program for a significant amount of time have found it outrageously like soothing. Like it takes all the pressure off. We talk about trading the economic numbers and a few other things. It's not for everyone. And it makes sense now because you look at the different profiles around and there is a big difference between, the four sort of single dominant profiles and the disc sort of personality profile setup. There's 12 different profiles across the board. Now, let's just have a look at this because the whole aspect of getting everyone up and running is, as I said, looking at a checklist, right? And focusing on the trade setups. I want to come back and just revisit this so you know exactly what you're looking for, right? And it's not by any sort of coincidence that the pre-trade routine, which, when we originally set this up, it was the daily trade routine. But then what we found was people were sort of like, getting into a bit of a routine at the start of the day, probably skipping things. And that what they need to do is when you're about to trade or you're looking at a trading opportunity, just quickly go through the checklist. Now, there's a lot of different components here, and I'm just going to go through these on a chart just so you sort of understand what they are. But we do talk about this all the time, right? Getting short-term and long-term direction working in unison gives us a very clear idea whether we should be buying or selling. Then you've also got the the impact of potential economic data. If there is data coming out, what is it? Is it a key macro, or is it just a, second or third tier number? And then really focusing in on these two components, which is the key to it, right? Your entry levels and the timing of the trade, right? And this is, what we're looking for. And at the moment, right, I was trying to set up the live trade signals on the site to actually align with this, but getting the trend lines in play, auto trend lines, and these sort of components, it was a little bit harder than just sort of coming up. Like you can sort of map it out, but getting the IT guys to sort of do it so everything sort of syncs was a little bit harder. I think we can get there, but at this stage, we're just looking at the overall first components of the pre-trade routine, right? Really focusing on direction, the timing of the trade, and then we will know here about the upcoming economic data, right? So let's just have a look at the trade setups that we should be focusing on. And this is, as I said, we're revisiting a lot of the content from the course, but you'll sort of realize that we are actually already doing this. But what we're doing now with the strategy fit matrix is actually aligning people's personalities to the way that a personality should trade, right? And don't think for a second, when it comes to the strategies, to the profiles, right? And I've sort of updated the trader levels, right? And it's not about who is the most bravado. It's about what suits you. For example, I've been doing this for 35 years, and I was in the sort of dominant profile for many years, but right now I feel a lot more comfortable in the stable profile, and I've got a blend, right? And most traders will have a blend. I've got the stable and compliant profile. These two are very closely related, right? Checklists, routines, less chasing the raw numbers and all these components. And this is what I want to just focus on right now. John, you are in this sort of category as well. Just off the top of my head, it was either compliant, stable, or stable compliant. As I said, they are very similar. So now let's have a look at the actual profile of these trades, right? Now, and this, once again, this comes along the pre-trade routine. Now, there's two sort of general time frames, right? And I say general because now that we go in deep diving into these profiles, you know what? The dominant guys who are just chasing, scalping, looking for the data, looking for that quick fix, they're working off sort of shorter time frames than sort of the hourly, right? The hourly to me is the benchmark time frame. Now, if you put in a dominant profile in here, well, you know what? If you want to chase things a little bit harder, go into a shorter time frame. If you don't, then you go out, right, up to sort of 4 hours in the daily time frame. And that's sort of what we're sort of looking at this stage. Now, just look at, and you guys will be aware, right? If you're trading the markets, how much noise there is in the market. Now, whether this is all down to the change of leadership in the US, right? We know the Don is a little bit crazy. He's got a lot of fandangle ideas. I think he's looking at he's got a calendar on his wall with how many days he's got left to go, and he wants to make every day a winner for him, right? He's a superstar. So we're sort of dealing with that. And you look at the daily charts, we're seeing really fickle price movement around sort of varying events. It started off with the tariffs. Now we've got Iran and Israel at it. You could go into like there's a million different discussions you could have on the Middle East and who's right and who's wrong. It's about the unrest, what it does to the markets as far as us, because we're professional traders. You're looking at oil, you're looking at safe havens. Those trades are going in, going out very quickly, right? So there's a lot of stuff here, right? And there's a lot of different instruments we can trade. But let's just break it down. So you look at the hourly charts, and if you're getting a little bit diced up on the hourlies, right? And occasionally, like you see the intensity of the event, and you see these big moves, and then all of a sudden, by the time you sort of get into them, they start reversing. Particularly the safe havens. Has been a brutal battleground. And I got to say, this is where a trade plan comes into play, right? You can get into the trade, take profit, right? The biggest mistake for most traders is they do not take profit, right? You think this is the big one, right? They're going to nuke the joint and this thing's going to go all the way, right? You've got to get used to taking profit and leaving some cash on the table. That's how you sort of build capital. Because if you don't, you get into a trade on, say, dollar yen, you ride it back to where you got in, or even beyond that. You either sort of come out with nothing or lose money. And that can lead to massive performance anxiety, right? Because you're getting it right, but you don't have anything to show for it. So hourly charts, yeah, that's sort of our benchmark time frame. But the daily charts is where this is where the gorgeousness is. Now, the main reason why people don't talk about daily charts enough or much at all, right? And this is where we identify the overall trends, and you can see very clearly what's going on, right? Euro up, dollar index down, well, sterling up, Aussie, I don't even know how to describe that, but Kiwi is starting to pick itself up off the floor, and dollar CAD's going down with the dollar move. Overall, dollar yen's going down, but it's been trading sideways since April. And this is your benchmark, right? Like if we had trading opportunities on the daily charts all the time, it would be amazing. But when we get the optimum time to trade the dailies, right? It's about every month or month and a half where it gets into an optimum momentum phase that supports the actual trend. That's what you're dealing with, right? And you can easily get distracted, right, with this because you're like, oh man, I'm looking to get these trades. And this is exactly what happens. People have not got the patience to wait for that. And I understand that. And there are opportunities on the hourlies. But it's all I want to do, first of all, is as part of our checklist, right, as a stable, compliant trader, you want to make sure the dailies and hourlies are working together, right? And as I said, this is where the live trade signals comes into play. Now, the live trade signals, right? This can be a cross check, right? I know I've actually sort of fallen into a bit of a habit of just coming to the watch list and going, okay, what's lining up, right? I got the majors, I'm looking at those and I'm going through the crosses, trying to sort of isolate which crosses are good, where we're getting the correct alerts here, like euro and sterling at the moment, giving us a buy signal for on the hourly charts. So, but this should be a cross check or a starting point, right? If you don't have, you're a bit time poor, whether you're managing, work hours, family commitments, trying to fit it all into one day can often be hard, right? And you don't want to be up at, 10, 11, 12 o'clock at night trying to do your analysis. You're going to be fatigued. You're not going to be sharp. You've just got to work out a way to do it. And that's where the live trade signals was sort of developed. The whole idea of that was to sort of follow the pre-trade routine, right? Give you the edge, take a bit of time off, go and find the instruments that are sort of trending at the moment, right? So that's what the aim of that is. So now with the ideal sort of setups, let's just come back to the hourly charts because it's the same as the dailies, but we are looking at the hourlies more for that intraday sort of fix. Think of and if you sort of want to write things down or have a mental note, the daily charts here, right? This is your gravy train, right? You're waiting for opportunities and waiting and waiting. And you know what? You can get distracted, miss the ideal time, and then you've got to wait another month and a half to sort of really get in at the optimum time. Doesn't mean we can't get into the trade at other times, but that really optimum, easy, technical setup, that's what we're looking for. This is your gravy train. When you're looking at the hourly charts or charts in a lower time frame than that, right? This is your week to week sort of top ups. Think of it like that. Now, your week to week top ups are there to sort of build capital. Don't overextend yourself. Look for the correct setup, right? Once again, focusing on the stable and compliant sort of personality profile, cross check, make sure everything does line up. Now, what do we talk about when things are lined up? So, what we're looking for is, and this is coming back to the core components of our training program, right? Looking at the sort of technical basis aspect of a trade. Just waiting for Sterling to load some extra data there. There you go. Okay, so what are we looking for? We're looking for trend lines, okay, ideally. Then we can like, and you just sort of just, you should be getting used to this all the time, right? One, two, that would have been the third touch previously, four, five, and you got a bunch of trend lines here as well, right? And you can see these things, they just don't go up and down in a straight line, especially with all the level of strange geopolitical events, if you want to call it those, and amongst everything else. So, you know what, we've got trend lines. They allow us to understand what the market is doing, what the players are doing out there, right? They're drawing the same trend lines. So then we can make assumptions of that. Now, with the bull bear pivot line, that's more just a number or a detail that's sort of that we can sort of go, you know what, is this, generally in this overall trend, right? You got this thing sort of, okay, is it going up or down? Well, at the point in time, if it's below the trend, below the bull bear pivot line, we say it's sort of going down, right? And if it's above, it's going up, just to give us a focal point to make that decision. Otherwise, what do you base it off? Do you just go, well, you know what? In April, it was down here, it's up here, so this is going up, right? Whereas we know if it breaks down through trend lines, it really short-term trend is over for the time being. It's now going down. Okay, so the bull bear pivot line is just to quantify that fact. Quite often, it will be associated close to the trend lines, and that's that's where it is. So there's a little bit of subjectivity you could get in here, right? And we want to be as objective as we can. Like if you're looking at sterling here at the moment, you're thinking, well, okay, it's sort of going down, right? And there is downward pressure on sterling, and it hasn't quite turned from being oversold, but it is. You know what? This is sort of, we've got trend line support here. The bigger trend lines below. So one of your first parts of your checklist, okay, you're looking at sterling here on the hourlies. You're looking at sterling here on the dailies. Okay, and you're just sort of quantifying, okay, is this going up? And you could be looking at whether you override what the bull bear pivot line is doing, and then look at the trend line support, which to me is a more tangible number because it's or instrument, because you got the trend lines there. The bankers will be drawing this, most traders these days, and then you got trend line support below, right? So we've got direction working for us, long term and short term. Now, as part of this workspace setup, I've got a few different templates, and one is to put these things side by side to make it a bit easier, just to sort of make that decision when you are looking at the overall trend, right? So you might be looking at this going, yeah, I can see sterling is just below the bull bear pivot line, but you know what? It's still in the uptrend and it's still trending higher, right? So that may be part of your checklist. Or if you're very analytical, and one of the key aspects of the compliant trader is high fidelity trading, which is basically fine detail. And you might just go, you know what? This is actually below the bull bear pivot line. It doesn't completely set up with what's going on. But in the same way, right? If sterling turns here, and it is getting into an overbought situation, and I haven't drawn in that cheeky little trend line here at the moment. We've just got the main trend line. You might be thinking, well, it doesn't fit my picture. Well, the setup here is, what happens if it starts turning up and it breaks back above the bull bear pivot line? Well, that could be your entry point to get into the trade, because now it fits the whole picture. Now, this is the grey line between stable and compliant. Do you use a little bit of objectivity here and going, it's pretty close. I've got the trend line, it's going up short term, long term. it's got momentum. Well, it hasn't got momentum on its side just yet, but say it starts turning up, then you can make a decision around whether you get into the trade there or not. Okay. So what we're looking at here at the moment is just technical setups, right? And so the whole structure of looking at and this is where you can come back in and you go, you know what? You can start drawing trend lines from any point. If you've got three touches, it's a good trend line, right? Which validates this one. One, two, count those two as just one, and that's three. So yeah, we've got a trend line here, trend line support. It's getting into a massive. This is like where the market's getting squeezed out of the position, but momentum will, you'd think, would stall at that trend line. And you've got this sort of technical setup, really good technical setup. You've got direction, short term, long term. We've got trend lines in play. We've got momentum about to come into play for on our side of things, and that's where you can be, putting your trade plan into play using Primetime Pro. This is where sort of Primetime Pro dominates over Trendline Trader, right? And they would be the two tools that you would be sort of using more often than not. Now, the benefit of using Primetime Pro is it will only execute when momentum does turn up, right? Once this sort of little squeeze is finished, that's when it will execute. Whereas Trendline Trader, you're setting it up to get in at a specified level above the trend line, right? And you know what? Stranger things have happened. We can see when maybe like over here, where even though it's oversold, it can stay in that oversold level for like a day or two, and or just drag on a bit. So that's where you would be looking at that setup. Now, so that's one of the key ones that we're looking at. Now, John and Jeffrey, if you've got any questions, by all means, sort of jump in. So this is so basically we're coming back to like core trading, right? Having a technical setup to me is the cornerstone foundation of your trade, especially for stable and compliant. You know what? If you had a dominant profile and you were just trading off the seat of your pants, price action, and a whole range of things, well, you know what? Half a setup might be good enough, right? And it's a high risk profile, right? So it doesn't mean just because you're dominant, you're making more money. Different setups, different economic or different market conditions can lead to different performance in those dominant profiles. So we've got that set up, right? And this, once again, just to come back to that, we've got, the technicals direction working for us, sterling up, up. Then you've got, is it a technical entry trade? You're going, yes, I'm not just trading at market. Short-term momentum, we're looking at momentum now as well. Have we got that working for us? Almost, right? That just isn't in play yet, right? And that's why I would be sort of choosing Primetime Pro, because it will wait for that. And it saves you spending maybe 4 or 5 hours sitting in front of the screens. So that's our sort of main setup. Now, let's just have a look here, because there's a couple of different components that I want to sort of just run by you. And because we have got a stable and compliant like cross-check, right? Analytical, we're more patient, we're waiting for all the ducks to line up. It doesn't mean the fundamentals don't come into play and play a part, right? Now, there's probably a couple of components of the courses that we'll sort of run through this, right? And there are 3 different types of fundamental trade setups. And the ones that are the best include obviously the direction and a technical setup, right? Definitely, right? And obviously as well as momentum. So if we are trading, and you can find that if you scroll down through the, which course is that? Trading the macro fundamental releases, right? There are 3 different types of fundamental setups here. It's maybe a good refresher just to have a look at. And that's under trading live economic data, a quick run through to prepare you for what's to come. Now, the other part is just coming up the top here, looking where the best trading opportunities are, right? So I've just sort of run through the basic checklist for a technical setup, right? We're looking for things to line up, short term, long term. We're looking for, momentum to come into play. We're looking for that ideal setup. When we see it, we put orders on, right? This is about no hesitation. You follow the checklist. When you see the opportunity, you put it on. Now, the best trading opportunities, they include trend lines, and particularly these sort of setups, right? A trend line which is, say, 10 points away or 20 points away. We're not talking about trading the numbers as such directly, right? Because we don't need to get involved in the actual release, as in, have pending orders. There's volatility. The liquidity pool dries up. You get kicked in, you get kicked out, you get slipped 10, 20, 30 points. But what we're talking about with these setups is looking for opportunities, say like Sterling here is at the moment, right? And if there is an economic event, say we had UK retail sales coming out, for example, right? This is where you are looking for opportunities. Now, even looking on the short-term charts, it doesn't mean like the trend is up, right? That's the easiest trade to go with the trend. Now, if we had a top tier number, inflation, employment's just a head kicker that sort of shakes the market a bit. But inflation, especially, and if the central bank said something, there are opportunities to go against the trend, like looking for a flush out. Now, though, if the long-term trend is up, right, it takes more than one number to knock this thing out, right? So, and it may take two or three negative inflation numbers to get the central bank really focused, right? But there are opportunities here. And if there's an economic number, you can have a checklist here and go, well, I've got opportunities here, right? And I'm not, you're watching the economic number to potentially manage the orders, okay? Whether you were looking to go against the trend, like a short term trade, right? And when I say short term, it doesn't mean it doesn't go down 50, 60, 70 points, 100 points, but you know what? The overall trend is up. Trend is our friend. If you go into that trade, then you want to be sort of thinking very, like in your head, you've got to be thinking the trend is up, right? If the data comes out weak, I know where to get in because I've got trend lines. If you don't have trend lines, you're not trading the numbers. That's what you've got to be thinking in a stable and compliant framework, right? Or, you know what, you might be trading off big round numbers. You've got to have something else, like a technical component in there to fit the criteria. And if the trade's going against the trend on the short-term charts, well, that adjusts your trade plan, right? You will be getting into the trade with a clearly defined take profit, and probably watching momentum very closely to work out where you should be potentially closing the trade out, right? That's what we're looking for. If the trade comes out as a trending opportunity, right, and there's economic numbers, well, we can make decisions after the data is released, right? And, and a lot of the times when we do see trending markets, you'll have, and I know this has only got sort of two touches, but it's the start of the new resistance trend line, right? It's there, and you're looking for maybe levels to get in. This is where you start to go, well, if this thing comes out strong, goes above the bull bear pivot line, where's the next level of resistance? It's way up here. Like, you're trying to work out, how can I get into this trade, right? If it's coming off an oversold situation and we get good numbers, well, this is the checklist, and this is where you come back in with a little bit more experience. We're not necessarily trading the numbers. We're trading the numbers plus the technical setup, okay? And if the technical setup says this is going up, this is going up, and it's going up on the long-term charts, and it's above the bull bear pivot line, we've got everything in our favor. It's just a matter of trying to work out where you actually get in and what trade tool you do get in with, right? And we actually get this a lot, right? When the markets are trending. You will have a general plan, because it's about the plan with the stable and compliant trader profiles. So you're looking for, if the numbers come out, say it's an inflation number, we're expecting 0.3, it comes out plus 0.5. if that's part of your plan, then you actually can potentially just buy at market, and you're not really looking at the price action. You're just looking at a level to get into the trade because it's now going to continue to go up for that next leg of um, the rally, right? Because you see, this thing goes up, goes sideways, goes up, goes sideways, goes up, a little bit of a clean out, but you see, you get this same thing, right? So is it the next leg or not? You'll not have a general idea as we get closer to that. So you're using your checklist to sort of, when you get everything lined up, you've got to actually hit the market, right? And it doesn't mean you're like, boom, inflation numbers are out, trying to buy and sell at the same time. No, no, you don't need to sort of chase it. You will know from going through the course if sterling's trading at around 135, say 70, okay, that it will sort of generally go up, say 20 points and stronger numbers, retrace, and then go back down. You can be you're looking at not trading the actual release, but you're trading either the retracement and the general move, right? It's a different profile to just trading the live numbers, trying to get in at the closest level, right? There's a bigger way to do that, and you are keeping an eye, obviously, on your daily trend lines to sort of get in if they are helping as well. Right. So technically, right, as I was sort of just explaining, if we are looking at, say, sterling, and you're looking at the trader at the profile technically, which is a lot of the stuff that we will be doing, then we're just looking at the calendar, seeing if it's US numbers that are coming out, sterling numbers, maybe euro numbers, because sterling and euro correlate. So you are looking at your checklist, and if you see trading opportunities, if there's no economic numbers, there's no reason for the trend to change, right? And I'll be confident to go in looking for using Primetime Pro just to get into those trading opportunities. And this is the thing, right? I should have mentioned actually. So if we have a setup like this and we've got a UK number coming out, inflation number comes out strong, right? Well, there's a couple of things. We can buy as soon as it starts going through the bottom of the stochastics here. If it goes up and you're looking to get in, you don't see a level, you go and put Primetime Pro on, because now the next leg of the trend is up. You want to be getting long next time it's oversold. It doesn't matter where it is, because it's going to have the profile where, like this, where it's stepping up, because that's what the data suggests to us. Okay. Right. So that's the sort of profiles that we're looking for. If you don't have technical levels, right, around the fundamental economic numbers that are coming out, right, that we just watch and we have a look at and go, oh yeah, that's good, that's strong, that goes with sterling, not getting too caught up in the price action. Then if you don't have technical levels, you're like, you know what, I can't logically get into the trade because there's no liquidity hubs here, right? And that's what I call the liquidity around the trend lines, where the volume of liquidity is. They are liquidity hubs where you can quantify where you can get in, where you can get out. Okay, so if they aren't around, well, you know what? You're back to Primetime Pro, just looking at basically trading the overall trend, okay, and also momentum, right? And that's, once again, the gravy train. You're back on the gravy train looking for that. So the setups, technical plus fundamental, they're what I'm trying to explain to you here is there are fundamental trades here that are a part of the structure of your trade for a stable and compliant trader. I don't want you to think you're just trading the technicals. You are predominantly, with your checklist, starting with the technicals, which all traders should. The dominant traders may not do so as much, maybe to their detriment, but you would be doing your technical setups. You've got your checklist, you've got your structure, you've got a routine. And if it fits the box, now you're looking for anything that may change that, right? That's where I'm coming back to, because that's when we look at the calendar, right? You come to the calendar and you think, well, what's going on with the economic data? Not just today, what's going on this week? Because if we get into a trade on the daily charts or even the hourlies, we might be looking to connect the dots with multiple data releases, right? Whether it's, say, we're trading euro and you get the ZEW numbers out, followed by retail sales numbers in the US, right? If that's strong and this is weak, we get a more consistent move. So you're sort of pre-planning that, and not necessarily like you're just coming to check the numbers. And if you've got positions in, you could be leaving positions on. If you're in the cash, coming back, just having a look at the numbers at the time of the release. How did retail sales come out compared to the range, and just manage the positions afterwards, right? It's a much easier, more relaxed mental way to trade the markets, right? More strategic than just the fast action from the actual numbers themselves, where you might get into a trade with big, large trade size, big risk, get 10 points out of it, make $1,000 or $2,000. But then you're like, wow, what was the real risk you put on there? It's probably about $5,000 to make two, right? And that can catch up with you. So that's sort of where we are with those profiles, right? And you're just basically keeping track of what's going on. The whole stable, compliant setups, as I said, are structured, and you could be using the pre-trade routine as a guide to make sure. And the whole idea of just using this is to get out of your head. Be objective. If you've got that in play, you're like 20%, 20%. I don't have any numbers coming out. I've got a great technical setup. It's another 20. Momentum's in our favor. And you're like, well, I've got to, and say your profile, you're thinking, well, if it's over 75%, I'm looking at a trading opportunity, right? And if it comes in at 80, you're like, well, I'm on, right? I've just got to go put the trade in play. Now, whether that's using Trendline Trader or Prime Time Pro or a combination, that's what you will get better at as you go forward. Now, any questions there, chaps? I know I don't want to bore you to death, but I'm just sort of methodically going over things, so hopefully it makes sense. And I know I'm repeating myself a bit. Now I've got some questions here. What's that, John?
Mate, I haven't done any trading on the daily charts at all. I'm just going back through parts of the course that I probably should have been going back through earlier. But what sort of, I mean, it's probably subjective, but what lot size would you use for a daily trade, and how long would you expect to be in that trade for? I know that's an
Well, it just depends
open-ended
on
question.
it depends on the move. So it really comes down to the behavior of the market, which obviously we don't know. I would go in with the same trade size. This is the
Yep.
main trade, right? You know, if you're this is where you are with your capital management. Depending if you're on a drawdown, if you're making profits, that will adjust. But you know, it's if it fits the profile, right? Think of it this way. You've got a trade checklist, and say, for example, on the daily charts, we've got an opportunity, and you've got this, you've got this, you've got a technical setup, you've got a bit of momentum. Say it doesn't fit the full criteria, right? So our perfect trading setup, coming back to, say, if it's sterling, right? We've got this going up, we've got momentum. It's going up on the daily charts, and I know you're talking about the daily charts. Well, then if it fits all the boxes, then the trade size is your maximum trade size, right? Which means doesn't mean you max out the account. Like you might have, say, on your desk, right? So you've got like my maximum trade size for where I'm at right now is 10 lots, and my minimum trade size is say 2 lots, right? Then working out your checklist, and if you work out that you know what, these trades here on the dailies, right, they fit in with everything. They're going up, it's above the bull bear pivot line, you've got a trend line, you've got momentum in your favor. Well, you're going to be up towards 75% at least of your maximum trade size. But this is where it comes back in, John. If you're starting to build capital from the beginning, then you go, you know what? I'm just going in with half the trade size. Or it could be a quarter, right? You need some benchmarks there to sort of get you in into the trade. And the idea is if you aren't in profit, right, you do not want to put, like if you go in with a really big trade size when you're in a drawdown, it can put the account under, put you under pressure and the account under pressure, right? So, but if you're trading with profits, well, then it's a completely different profile. You'd be more comfortable to be, say, trading 7.5 lots or 10 lots on the opportunity because you're trading with cash that you've already made. It's a more relaxed frame of mind. Even if the trade loses, you're not going to, the account's not under pressure. It's not going to impact you too much either. So, but generally speaking, that trying to work out how much you trade is the same for the hourlies and the dailies, right?
Yeah.
Don't think there's a difference, but just because you're trading the daily charts, you're trading more or less. They're very similar trade plans, and that you can work out over time and finesse, but it's the same for both. Your trading profile is what it is, and the capital you have at risk, you don't have two different accounts, right, for one or the other. And how long do we hold the trade for? Well, we have a trade plan at the moment, right? The sort of general trade plan I use in Primetime Pro is a 50-point stop loss and a 300-point take profit. Now, that is a daily trade plan, daily chart trade plan. So what we're looking for is to capture an overall big trend, and you never exactly know when they are going to happen, right? If there is a continuous change in inflation, central bank is signaling, we may have to potentially do something. If it continues, then the next number comes out the same way. You've got to be looking to get into that trend. Well, hopefully we already are. These trends, these long-term trends don't like just change. Okay. They are built around the fundamental structure of the market and the central banks. That's what all these trends are, all the positive goo that is in there. Okay. So does that answer your question, John?
Yeah, yeah, it does. And I mean, I'm probably, I mean, because I haven't been trading long, I think I'm probably more conservative at the moment as I'm learning.
Yeah, yeah, and that's a very natural place to be. And that's where everyone starts, whether you're in a bank or trading for yourself or whatever you might be doing. That's 100% sure.
Yeah,
Okay, so let me just run through a few questions here that I've got. Now, one was about pattern recognition, and I know it's on the trader alignment reports. Now, what are we talking about? Now, when we talk about pattern recognition, you go back into the 90s and it was all about flags and pennants. And, if you're looking at, even candlesticks like shooting stars and a whole range of things. What we did originally was, well, I did was just break it down because they are all just different types of support and resistance. Now, the trend lines are the most common support and resistance or levels or patterns that the bankers use in particular, right? And proprietary or professional traders. So when we're talking about pattern recognition, it's about, this is what we call pattern recognition, or I would, right? Trend lines that have multiple hits, right? That is, and so it's not just the price action and how the visual looks. It's actually this, the pattern recognition is, okay, I've got a short-term support trend line here. It was going down. It's now clearly going up. And the pattern is the trend line and the momentum, right? So combine those two together. That gives you a pattern. So this goes up and it comes back down again. This should probably be down towards an oversold situation. And if it's down here and starting to come back up, that's the overall pattern. It's not just, in my opinion anyway, it's not just the visual that you get from the price action, the pattern the price action makes. It's a bit more detailed than that because we can go a little bit deeper. We know more about the market and how it works. So we can go in looking for pattern recognition, especially on the hourly charts, right? Because on the dailies, and we are on the dailies here, they sort of stick out like a sore thumb, right? This is exactly how, see how the daily charts are at the moment? That's exactly how you want the hourly charts to look. And that's generally how they used to look or always have looked. What we're getting is they are a basket case because of all the geopolitical stuff going on with the tariffs, now the bombs in the Middle East and everything else, right? So if you're looking at this and wondering, hang on, I'm not doing too many trades. It's because the market isn't giving it to us just at the moment, right? So the pattern recognition is the not just the price action and what it does for us. It's the trend line and the combined momentum. That's the pattern, right? That's what I'm referred to as the pattern recognition that you need to be sort of looking for. And that's sort of where, funnily enough, that's what I'm talking about here. This is a part of the pattern recognition is the watch list, right? Pairs that are lined up short term and long term. That's a starting point for pattern recognition. Now what you need to do is, yeah, that's great. These things are going up, but where are the trend lines? Where are the trend lines in proximity to the price action? Because if they are close, right, then we can come in and do a deep dive and go, okay, I've got a live one here. Like, what are we on here? Euro. This looks pretty good, right? Euro, I mean, it was going up against everything yesterday and it's having a breather, right? Just because it's coming down, don't get scared and think, oh my God, this is like going down now. No, it's having a breather. It doesn't go up in a straight line. It's getting to an oversold situation. If it breaks back through, looking for it to go back up. So, and you've got, this is the other part too. You're like, okay, I can see it's just below the bull bear pivot line. We've got a short-term support trend line there. Two, you can say it's two touches, maybe three. You've got a previous resistance line, which is now acting as support with another support trend line. And then you've got a support trend line below that, right? Now that's a 150 point difference between these levels, but there are support levels building up. This sort of pattern here, where you get these fanning out, say support trend lines, if an instrument's going up, that sort of pattern is very common in trending markets. You're right. Like it's like for the trend to overall break, it's got to break multiple levels of support. And you will see when instruments are trending up, you get that sort of pattern recognition of three fanning support trend lines. That is telling you 100% the thing's going up. And if all you're waiting for is generally momentum to come into play, and then what do? Well, we sit back and we wait for, okay, let's just see what this fundamental data does for us. Okay, does it go with the trend or is it going to debuckle the trend, especially on the short-term charts? And as I said, don't get all worked up and think, oh my God, here comes the numbers. This is going to be terrible. No, you're sitting back like a spectator at a sporting event, right? You don't have your fingers on the buttons. You're like, okay, this thing should be going up. Maybe you're already long. Maybe you're not. Maybe you're looking to get into the trade, right? And you're looking at the numbers and then making decisions after it, not immediately, right? You have a general plan and think, well, you know what? If this thing starts going up, I've got to be on this because it's like you want to be on those bigger moves, like 114 up to like there's a 200 point move, right? Or over 200. That's what we could be looking for. So you're looking for maybe and look at the let me just isolate this thing here. You look at the price action after like it spikes. Right, these are economic fundamental releases or announcements, right? See how it goes up and retraces. Now that's retraced almost about 70 points or 50, no, about 25, 30, right? You don't need to get in unless it's an inflation or a central bank change of sentiment that you don't need to rush in, right? You can just be looking at it and going, you know what? I'm sort of looking at the trade here. Fundamentally, yep, there's fresh data out. It is going up, right? And that can be, so you're just looking for confirmation of direction and then you're getting into the trade if you're not already in it. If you're already in the trade and you've got 50 points in the cash, you can really come back to more like a fund manager because their positions are so big they can't get in or out. You can close the position out before the release and remove all risk. And then look to get back in. If it comes out strong, you're like, you know what? I'm going to buy it up towards 25, 30 points above the market. I just want to get back in. Or if it comes out weak, you've saved yourself some cash and you can look to get into the trade on the next trend line. Okay. There's a whole range of different possibilities that you can use. And we're using an objective checklist to remove your brain from the situation, so to speak. So really, pattern recognition's about the structure of the trade, and it's just as I was just saying, it's not just your basic trade formation patterns, which I think I've got in in the courses there somewhere. Now, swing patterns. Okay. Now, a lot of people ask me about swing patterns and swing traders, and it became prominent about maybe 10 years ago when retail trading really sort of took off. Everyone's like, I'm a swing trader, which basically means they have massive stop losses. To me, a swing trader is someone that trades the trends, the longer term trends, right? You are looking for the opportunities here, and this is probably coming back to answer part of your question from before, John, about trade size and how long are you in the trade. Now, if you are trading the dailies, your general outlook is possibly 2 weeks, maybe 3 weeks, right? Whether you're closing the trades out on Friday, reinstating them on the Monday, remove that event risk, which I would be doing at the moment. That's sort of where you are, and you'll be surprised at how that will change your mental profile. And what I mean by that is, when you get into a trade and you're like, oh, I hope this goes well, right? Say sterling drops back a bit here, and the data, nothing's really changed in the data, it's just the market long getting flushed out. Then you're like, if you're there, you're like, oh my God, I hope this goes well. But when you're thinking I've got 2 weeks for this to sort of work itself out, you're not really worried about the immediate price action, right? It removes all the noise that's in the market, and then all of a sudden you are just trading the the overall trend, right? That's what we're looking for. Now, ideally, this is the situation with the overall trend while I'm here. Now, ideally, you would love the currency to come back towards the trend line as it gets into an oversold situation, right? If it doesn't, and that can happen, well, you've got to make some decisions about where to get in. I would be using it off momentum predominantly when that momentum shifts. And you'll see if you start looking at the daily charts a bit more, John, how very little stochastics changes, right? It's like a sloth, right? It is in slow motion. So you just got to take your time. If it's up here, then you might be thinking, well, I'm going to use Prime Time Pro to get in here, but what's the one thing it doesn't match here with like for me, instead of asking you, I'll just tell you. What it doesn't match my criteria here for like an awesome trade because it's sort of miles away from the trend line, right? I'd love to have the trend line as a protective mechanism for the trade. Now, if it's way up here and it's starting to go up again, it doesn't mean it doesn't keep going up. But what that will do, that will adjust my trade size. Instead of like 10 lots, I might be just going for 5, right? If 10 was my maximum trade size, I'm like, you know what? This ticks a lot of the boxes, but not all of them, right? And once again, if you come back to the pre-trade routine, you'll be thinking, have I got a technical setup? Well, you sort of do, but you don't have the support of the trend line. So that might be sort of just 10% there. Okay, you get the direction, you've got this, you get that. And if say you've got momentum, okay, you're looking at, well, I've got a 70% here, right? And for a good trade, I want 80%, 90%. You'll have trades that do 90% and you'll think you'll wait for all of them. Next thing you know, next week you're trading a trade with 70%. And then when you lose your marbles, right, get emotional, you're trading trades with about 40% probability. And that's where we've got to step in. So the swing patterns really trade in the daily charts, looking for a longer term move. And you know what? Depends on where you get in. Like you can see here, right? These trades were here. I mean, the trend line was already here. It hits this level, no surprise, holds, right? It's not like we drew that trend line afterwards and it moves up. You want to get the trend like here, right? And if you get into the trend at the wrong time and it's drifting sideways, yeah, there's still cash in it. You might be trading a 150-point range, but that's where the trade is. And this is where you start building some rules for yourself around like the checklist here, right? The pre-trade routine is to give you the foundational components to start developing your own pre-trade checklist. And So that's what I want you to do is take the more you take ownership of this is the guide you into it, and the more experience you get, you can tweak this, right? And that leads to you tweaking your trade size. And the important part of that is it's about continuity, trading, development, right? And making money. And you can actually finesse things a lot better. What we are experiencing, once again, if I come back to the hourly charts and traders that are unaware of, checklists and routines and all these other sorts of things, then they are getting bashed up here on the hourly charts because they're getting restless. They've got performance anxiety. It's like, I'm not making money this month. You don't make money every month. That is a fact. You might make a small amount. You may not do too many trades, but we are waiting for that checklist to get us into the trades. That's the key component to a stable, compliant trader profile. Okay, now execution. Like, this is one of the last questions coming into the execution. A question about hard orders versus scaled orders, right? Now, like, a hard order for me would be what have we got here? We've got sterling, right? And it is coming down towards this trend line. Now, a hard order would be an order that is already sitting in the market. Okay. You are confident with the trend. And this is something where you would be using Trendline Trader. It is in the market, ready to be hit, right? It's set in the market. I would sort of consider, like, coming back to scaled orders, right? Now, scaling in, right? You could be like looking to get in at, say, you break your trade size up and you take and your stop loss structure into, say, 3 or 4 different trades, right? And you're getting in as it comes back down. You're improving your average, your entry average, because you want to get into the trade. It's going up, and then fingers crossed it goes back up. Your average is, say, in the middle, and you end up with a nicely scaled position. But I would just call scaling the orders discretionary, right? A hard order is an order in the market where you are ready to go, right? And I guess, you know what, with Primetime Pro, it is like a hard order because, you know what, we are going to buy if the profile matches. Now, there's 2 different profiles on Primetime Pro. There's the trade mode, then there's the auto trade mode, right? If we have auto trade connected, if it's below the bull bear pivot line and it does start to go back up, it will not trigger if it's below the bull bear pivot line, right? The idea is you don't want to get in if it goes too far, right? But if we have trade mode set up, so auto trade would be, to me, like a potential discretionary setup on Primetime Pro, whereas the trade mode is a hard order. Okay, it's basically hard orders are those ones you've got in the market ready to be hit, whether that's Trendline Trader using the trend line or Primetime Pro using trade mode. Now, scaling orders. Now, this is the thing with scaling orders, like say sterling's gone up and it starts to come back down. Now, I might only have one order here in the market, right? You don't necessarily, because if you have scaling orders like locked into the market here, right, they are like hard orders. So with the general scaling profile, you may only have one order in the market, right? But the general plan is you're going to have that order, right? And then you want to see the price action afterwards. You may not, it's like you don't want to just jump in boots and all. You're like, okay, right, I've got in here, it's lower, it's at the bull bear pivot line. I'm not buying here. I'm going to wait and see. I might wait for momentum to turn. So it's more discretionary, but you're entering with a plan. And the plan is, okay, I'm going in here. So I'm trading 10 lots. I'm going in with 2 lots here because I like the idea of sterling going up. When it gets down to, say that's at 75, 135, 75, when it gets down to 50, I'll reassess and have a look at the market. Has the picture changed? Has the momentum situation changed? Has there been fresh news out or whatever it might be? So if the market does go against you, you can, and your plan would be yeah, I'm actually going to be looking to get into the trade. Like, say, there's two situations here, right? You get into a trade here with the scaling in your mind. When it gets to the trend line, you might wait for it to get there and go, all right, it's bounced, right? Now I'm getting in. Okay. And, or if the other situation might be, hang on a second, it's broken down here. You know what? I'm not going to scale in. I'm just going to stop out, right? So the scaling situation is more like a discretionary order in the market. Okay, that's sort of hard orders versus scaled orders. So and those scaled orders, they're on your pad, notepad, but they're not in the market, if that makes sense, right? So that was just someone asking about hard orders versus scaled orders, right? The scaling plan is associated with scaled orders, but to me, it's more around. If I can just get that pen back on, like a scaling plan, you don't have all the orders in the market lined up, right? Because they are in the market, they are hard orders. You don't get a second choice about making a decision about that, right? So I would be considering that. And for example, like you may have the first one getting into the level, you may have the second one as a hard order in the market. This is your scaling plan. From here, your scaling plan is okay, when it gets to this level, I'm going to have a look, right? And it may, it can easily hit the level, bounce, which you may expect, and you've got two positions on. But you've got to have a plan here. The plan isn't just like, I'm going to get in and then check it out. No, the plan is I'm going to get in and then I'm going to check the price action around the trend line. And if it's good, well, I'm getting into the trade. And the benefit of that is you get into the trade in case it keeps going up, but you're not putting all your risk on it. You're not putting all your eggs in the one basket. And you can make decisions if it hits the trend line and it's just starting to turn up and the price action changes, well, that could be where you get into the last part of the trade, right? Or not. Or you just go, you know what? I'm just going to sit on these two positions. But this is the thing. You have a plan before this happens because if it gets there and you're out of the cash, you're like, oh no, I'm not going to buy the last part of my scaling plan here because I'm already out of the cash. But it's like, that's ridiculous. You are at your best before you have positions in the market. As soon as you have positions in the market, emotions get involved and you do it. So like you might get in the first trade, second trade, hits the trend line, holds, starts to bounce a little bit, starts to go up momentum wise. Then you buy the other half of the position, which is 3 and 4, right? And then you're in the trade. It's up here and you're thinking, I'm glad I was objective about that. Okay, so that's where we are, right? Just to reiterate, with the general setups, right? We've got the technical setup, the framework. If there's no fundamentals, there's nothing to worry about. Now, if you don't get all the components of your trade checklist sort of lining up, right? Well, if it's only say have some criteria. If it's 70%, like 70% is sort of the bottom end of the range for me as far as am I going to get into the trade here? My probability percent is 70. It's like that's pretty crap, right? 80% is good. I'd probably go 75. Suggest you go 75%. If you've got a 75% profile, then let's get some trades on it. But if it's only 75%, maybe it's a quarter of your trade size. If it's 80 to 85, maybe it's half your trade size. If it's 90% plus, then your full trade size. Okay? You've got to have this connection with the setup, okay, here that connects to your capital, right? And be objective. Your job isn't to think about it. Your job is to come in and go, what's this one? Oh, yeah, got that. What's this one? Yeah, got that. Have we got any of these? Not at the moment. Then we go, I've got a technical setup here. Momentum's in play. Yep, I've got that. I've got that. Then your job is just to count those because if you start thinking about the trade, you think about the risk and you think, oh my God, I don't want to lose my money. But that's the wrong way to go about it. And that's an 80%er, right? And you're like, wow, I got a trade on here. I'm going half to 3/4. Like at the moment, John, as you're saying, you're still sort of developing. I might go half the trade size. but in a couple of months' time, you make some cash. You're now looking at three quarters of the trade size of your maximum trade size, I should say. So that's where it sort of connects. And don't forget, like as a summary, we are still for a stable and compliant trader, we are still looking at the economic numbers. We aren't trading them directly, but they fit in. Like you've got a plan and you've got structure here. Do these numbers fit in with what we're seeing over here and over here? If they do, let's look to try and get into the trade, right? And that's where, you know what, you can use the resources that we've got. And what I'm talking about is the traders, the other traders. If you've got like a trade here, whether it's a stable or compliant trader, like everyone's got access to these things, right? I want everyone to see what they're doing. But then if you want to chat to the guys that are doing the same as you, then you can go and do it. But this is where you come into a resource and use the community, right? As a sounding board. You know, like, what am I doing here, guys? What do you got? What do you think about getting in here at this sort of level or that sort of level? How do we do it? What's the best way, right? There's gold in the trading community, and you'll be surprised. There's some traders here that are shooting the lights out of it, right? So, and pop if you've got questions, pop it in there, right? That's like you've got to be doing that. All right, and I think that's the end of all my questions. Um, yeah, I think I've covered most bases. There might be some more other questions. If there are, by all means, throw those on the in the chat. Jeffrey's there. I haven't heard that before. Rescaling. Yeah, that's right, John. It's more like there's a lot of text out there about trading and what you should do about how you get into the trades and how you scale. Scaling can you imagine how like a lot of it's common sense, right? Can you imagine having a scaling rule in place here? You're looking to get it, like you don't want to miss, like sterling starts going up, you're getting in here, here, here. Like if you get in with hard orders and you're fully exposed here, and then there may be a shift in the geopolitics, and then it's here instead of like it's breaking momentum, sort of going up or drifting sideways, and it's breaking down. You are a sitting duck, right? So just use that discretionary component of like, but the most important part of the scaling plan, discretionary, is instead of having these as hard orders, they are on your pad and you have rules for you to do certain things when it hits certain levels. And one would be, okay, check the price action at the trend line. If it's good and momentum's in my favor, well, I'm in, right? At the same time, if you get into the trade here and it's breaking down and momentum sideways drifting, you're in trouble, right? So you might consider even closing the position out, right? And just coming back and going, you know what? The setup has changed here. The structure of the trade has changed. Short-term fundamentals, whatever it might be, and I'm out, right? Last thing I want to finish with is, okay, the daily charts. This is your gravy train, right? This is your gravy train. Central banks are a big component of these trends, right? The hourly charts, these are week-to-week top-ups, right? And think of them like that, because if you're looking at the week-to-week top-up, right, and you see like some crazy stuff going on, like you're not going to be topping up your account. You're going to be actually handing over some cash, which is disappointing to say the least. All right. Okay. So that's it, guys. The hopefully, it was a refresh on the pre-trade routine, looking at the setups, which is technical, predominantly technical, and then applying the fundamental aspect on top. That is as simple as it can be. Any questions to finish up?
I'm good, bro.
Okay, cool. And don't forget, you've got all these trading resources. You've got, the live trade signals, the calendar. Once we automate this page, it'll be a little bit better. But as well as that, is the Discord. All right, guys. Well, this is about half an hour longer than I thought it would be. I guess I just got caught up in myself. I shouldn't have just kept repeating, but I wanted to sort of do that repeat. So you just sort of get it into your mind that this is exactly what's going on. And you know what? Trading events, like, and I've traded like a thousand Middle East events. This stuff, mate, it just sucks. It ruins the price action, ruins the fluidity of the market. So don't get all bent out of shape. What I'm getting pissed off with is we just get through the next phase of, okay, tariffs are done. Then it's like straight away there's another planned event. I'm starting to sort of think these things, they're just rolling from one thing to the next. All right, guys. Well, that's it from me. Hopefully that got you thinking and focused. And as I said, if you have any questions, just jump in the Discord. Stable or compliant traders, you can throw your questions in there. All right, guys, have a good one. All the best. Cheerio.